Hi, this is Fernando Reboso with Reboso and Associates, reallynicehomes.com. Today we're going to be speaking about short sales. Specifically, we're going to be speaking about short sales with Wells Fargo Bank and what are the steps that they require for you to take in order for you to do a short sale with Wells Fargo. I want to commend you because of your situation, the way that you're being proactive and seeking for a solution if your home is underwater. It's a very good step for you to be able to find out what options you have at this time. The step number one that Wells Fargo requires you to do a refinance. This is a normal step. Whenever the rates become lower, you may be able to lower your mortgage payments, or you may be able to extend your loan from 30 years to 40 years. It's a great time to do this, especially if you can qualify and you make enough income. When a refinance is not possible, then step number two comes into a factor. This is when you make enough money, but you do not have enough money to make your mortgage payment because you owe a lot of money to a lot of creditors. You need to fix your financial affairs, and Wells Fargo may require you to go through a financial counseling in order for you to be considered for the next step, which will be a loan modification. A loan modification is basically a way how to renegotiate your loan with the bank based on the current situation that you have right now. Something has changed. This might be a temporary solution for you. It could be a temporary setback that you have, which is you lost your job for a few months, or you're not making enough money, or they cut your hours or something like that. A loan modification is a very important step. Make sure it makes sense for you at the end, because over 80% of all loan modifications after 6 months they become in default again, and the reason why is because the loan modifications are not being negotiated the right way. You have to understand that loan modification is like you actually buying your home all over again for the amount of money that you're gonna owe to them and how much money you gotta pay every month. When all the steps are completed, in my opinion, the most sensible option for you is a short sale. This is when the bank is going to let you sell the property for what your house is worth right now and the current market conditions, and not into what you owe to the bank. The difference that you're going to get from what you owe to the bank to what you sell your property becomes a deficiency. And in a good short sale, in a short sale that is done properly and successful, that deficiency will be forgiven by the lender, and you basically just walk out, sell the property, and you're done. Very important factor for you to know that the person helping you doing a short sale is a person that is qualified and understand that whatever he's doing or whatever this person is doing for you on your behalf with the bank will determine what type of life you're going to have in the next few years. Financially, you may be obligated to a huge amount of money with a bank if a short sale is not successful. Step number 5. This happens when a short sale is not successful, and basically it's telling us that you are not able to sell the property as a short sale for one reason or another, and then the bank will allow you to give them the keys and say, Mr. Banker, I cannot make the payments anymore. I want to walk out. We tried to do the short sale, we couldn't do it. And then obviously this is not going to relieve you for any deficiency that you're going to have against them. You're still going to have obligations with the bank. It's better to hire an attorney to do this, okay? So speak to an attorney before you do a deed in lieu of foreclosure. The last step, which is step number 6, is the one that you should try to avoid at all costs. This is going to hold you back 7 to 10 years. You're going to have a deficiency against you, and it could be filed against your future wages. Very important thing. You want to avoid a foreclosure at all costs. The programs that you have with Wells Fargo, as opposed to the government-sponsored programs, which is a half a short sale, are a little bit different. Okay, the person helping you should be able to explain to you the difference, But with all steps taken before you do a Wells Fargo short sale program, they are qualified to accept a half a short sale, and this is probably the best option for you. Make sure the person helping you do a short sale will start with a half a short sale to begin with. Who are you going to call when it's time is done to do the short sale for you? It's very important you choose the right person. We like to be those persons. We like to be the one that's going to help you, and our cost to you, the homeowner, is 0. Give us a call. Thank you, and have a great day.